Okay, so you've probably seen the headlines. After a pretty massive run-up, a sudden chill has swept right through the crypto world. Today, we're going to unpack the three key reasons behind Bitcoin's big cooldown and, what it all means for the market.
And yeah, the headlines are not exaggerating one bit. I mean, from Bitcoin all the way down to the altcoins, we're just seeing a sea of red. This isn't just some minor blip, it's a real wave of caution that's spreading across the entire digital asset space. So, what's really going on here?
All right, to get to the bottom of this, here's our game plan. We'll start with the big picture cooldown. Then we're going to dig into the three main drivers, these inflation fears, the technical tumbles, and just general investor caution. And finally, we'll tackle that big question on everyone's mind, is this just a healthy pause, or are we looking at the start of something bigger?
So first, let's just zoom out a little bit. This cooldown isn't just about one or two big-name coins. Nope, it's a broad, systemic shift that's hitting the entire digital asset landscape.
In just 24 hours, the entire crypto market lost over 1% of its value. Now, that might not sound like a lot, but trust me, it represents billions of dollars just poof, vanishing. It's a huge signal that this cautious mood from traditional finance is spilling right over into crypto.
So, what's the first major driver? Well, funnily enough, it has less to do with crypto itself and a whole lot more to do with the wider economy. Turns out what happens on Wall Street definitely doesn't stay on Wall Street. We're all feeling it at the grocery store, right? And the data is backing that up. Americans are expecting inflation to stick around, and that puts the US Federal Reserve in a really tough spot. It sends this ripple of uncertainty that spooks investors across all markets, but especially in crypto.
You can think of it like a set of economic dominoes. When inflation stays high, the Fed can't cut interest rates. That makes holding good old US dollars a lot more appealing and safer. And when those safe assets start looking good, the riskier ones, like Bitcoin, suddenly look a lot less attractive. And that leads to a sell-off.
All right, the next piece of the puzzle isn't about the global economy. It's actually about the crypto market itself. We're talking about a kind of downward spiral that gets triggered when prices hit a breaking point and all the automated trading bots take over.
$688 million. Just let that sink in. That is how much money was wiped out in a single day from traders who were betting the price would go up. The second Bitcoin's price dipped below a critical level, it triggered an absolute fire sale, with automated systems just dumping assets and pushing the price down even faster.
But, and this is a big but, despite that absolutely dramatic number, it's really important to get some expert context here. Analysts like Ryan Lee are suggesting this is a pretty predictable market adjustment, a correction, not a sign of some full-blown systemic collapse. The market is just letting off a little steam.
And there are a bunch of other technical pressures building up too. For one, the market was considered overbought, which basically just means prices had gone up way too fast, way too soon. On top of that, you had uncertainty around traditional finance events, like treasury auctions and delays in new crypto investment products. It all led to what one analyst called sentiment fatigue. Investors were just getting plain tired of waiting. Okay, our third and final reason moves beyond the economics and the code. This one is all about the human element. It's about the collective mood of the market, which, honestly, can be just as powerful as any algorithm. Right now, what's called a risk-off mood is pretty much dominating the financial markets. It just means investors are getting more defensive. They're playing it safe. And that caution is spilling directly over into the crypto space, which, let's be honest, is often seen as the riskiest end of the investment spectrum. And this cautious mood, it affects different people in different ways. You've got your short-term traders who are quickly taking profits off the table to protect their gains. But at the same time, the bigger, long-term investors are kind of hitting the pause button, just waiting on the sidelines for a clearer signal before they jump back in.
So let's recap. We've got economic pressure, technical selling, and a super cautious mood. With all these forces swirling around, the big question is, where does the crypto market go from here?
This is it. This is the key question on every single investor's mind as they're watching those charts. Is this the start of a bigger downturn, or is it just a temporary bump in the road?
Right now, all eyes are on one critical number. Analysts see this price level as a huge line in the sand. If Bitcoin can hold steady here, it could be a massive signal that there's some real underlying strength and confidence just bubbling beneath the surface.
And that, right there, is the optimistic case. Despite the current chill, a lot of analysts believe that the long-term positive trend is still very much in play. For them, this isn't a crash. It's just a necessary pause before the market gears up for its next big move. So ultimately, what this all shows is a market being pulled between these incredibly powerful economic forces on one side and its own internal dynamics on the other. And it really leaves us with a final thought to chew on. Is what we're seeing right now a true moment of weakness, or is the crypto market just catching its breath before the next big race?